We are covering unfair claims settlement practices for the property and casualty exam. These are actions by an insurer that are illegal because they undermine the basic promise of an insurance policy. The exam tests your ability to identify these prohibited actions in various scenarios. A key area is the failure to act promptly. For example, if a policyholder reports a claim, the insurer must acknowledge that communication within a reasonable period, often specified by state law as a set number of days. An exam question might describe a claims handler who receives a first notice of loss but waits 30 days before contacting the insured. This is an unfair practice. Similarly, an insurer cannot refuse to pay a claim without first conducting a reasonable investigation. A scenario might feature a homeowner who files a claim for wind damage, and the insurer denies it outright without sending an adjuster to inspect the property. This is a clear violation. Another major unfair practice is misrepresenting pertinent facts or policy provisions. Imagine a claims adjuster tells an insured that their policy doesn't cover water damage from a burst pipe, when in fact it does. This is a prohibited act of misrepresentation designed to avoid paying a legitimate claim. The exam will test your understanding that deliberately misleading a claimant about their coverage is illegal. Insurers must also provide a reasonable explanation for any claim denial based on the policy language. A simple denial letter stating your claim is not covered is insufficient and constitutes an unfair practice. The denial must cite the specific policy provision that justifies the decision. One of the most tested concepts is compelling insureds to initiate litigation. This happens when an insurer offers a settlement that is far less than what the claim is reasonably worth, forcing the insured to sue to get a fair amount. For instance, if a claimant has documented repair bills totaling $20,000 for a covered auto accident, and the insurer offers only $5,000, this could be seen as an attempt to compel litigation. The exam loves except. Questions on this topic, such as, all of the following are unfair claims practices except. You'll see 3 clear violations and 1 action that is a standard, acceptable part of the claims process, like investigating a claim where the facts are uncertain. The key trap is confusing a legitimate dispute over the claim's value with an unfair practice. An unfair practice is not just about disagreeing on the amount, it's about the insurer failing to act in good faith. A great way to remember these core violations is the phrase, "Don't DIM the lights on a claim." DIM stands for delay, investigate improperly, and misrepresent. If an insurer delays communication or payment, fails to conduct a proper investigation, or misrepresents the policy, they are engaging in unfair practices. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.